Hi everyone. 13F filings have been released, and today we are going to look at how legendary investors are doing in the market or what they may be thinking about and where they putting their money right now. In my previous video, we briefly looked at President Trump's first quarter portfolio and other famous politicians' portfolio as well. When the market is shaking, it is very helpful to see where the big players who have already survived in the market for a long time are moving their money. Before we start the video, I upload important market news every morning at market time. I believe it can help you when you're trying to decide your investment decision and direction. Please check it out and subscribe to the channel to not miss any update. Okay, now let's get started. Now, the Q1 portfolios of Warren Buffett, Stanley Druckenmiller, Bill Ackman, and Peter Thiel have been released. What is interesting is that all four of them did not move in the exact same direction, but there is also one common point. They are all building some level of cash. Before we start to check their portfolio, let's briefly look at the market situation. Looking at the four major US markets this week, the stock market held up better than expected, but there was a pretty big shake-up in the bond market. And looking at stock trading activity, money continued to flow into the semiconductor side this week as well. Buying was strong in Micron and Intel, while there was also some profit taking in semiconductor ETFs that had already surged. Now let's officially look at the portfolios of these legendary investors. First is Berkshire Hathaway. Warren Buffett has stepped down from the CEO position, but he is still known to have influence over important investment decisions. The most noticeable point in this portfolio is that Berkshire newly bought 3 stocks and sold 16 stocks. There was more selling than expected. The overall portfolio size also decreased, and it looks like they are continuing to increase their cash position. Buffett does not seem to be looking at this market too aggressively. Instead, he seems to be focusing on selection and concentration. Looking at Buffett's top 7 holdings, Apple still has the largest weight. After that, we see familiar companies like American Express, Coca-Cola, Bank of America, and Chevron. But the most interesting one this time is Google. Buffett increased his Google position quite a lot. In the past, he had a strong image of being conservative toward big tech, but now, if he thinks the price is attractive, he's also willing to buy big tech. On the other hand, looking at the stocks he sold whole positions, both Visa and MasterCard. This is pretty symbolic. Buffett used to have the image of liking payment networks companies, but this time he reduced that side and increased Google. So we can also see this as a sign that the structure of the market may be changing little by little. Another disappointing part is United Health. It looks like he sold United Health before the rebound. If you look at the chart, after he sold it, the stock price rose sharply again. So even Buffett does not get every investment perfectly right. But Google looks like it was bought at a relatively good price range. Since Google's stock price has recently moved higher, even if there was some disappointment from United Health, the gains from Google could be enough to make up for it. Second is Stanley Druckenmiller. Druckenmiller is still often mentioned as one of the best investors today. He's famous as one of the greatest current investors with no losing year over 30 years and an average annual return of 33%. However, he also does a lot of short-term trading, so it can be dangerous to simply copy his moves. We should not look at this as something to follow directly, but rather as a way to get hints about where he's seeing opportunities. This time, Druckenmiller bought 31 stocks and sold 23 stocks, but the overall portfolio size actually decreased. It decreased by about 22%. So he actively rotated his holdings, but overall he seems to have lowered risk a little. Looking at his top holdings, the healthcare companies Natera has the largest weight, And we can also see some semiconductor and South America related names. What especially stands out is Argentina and Brazil. Druckenmiller continues to increase his exposure to South America. The South America related weight in his overall portfolio has increased to 14% now. He has often said in interviews that he views commodity as important, and that seems to have connected to his South America investment. The important point is that Druckenmiller is not only looking at US big tech, he's looking for opportunities globally. And on the semiconductor side, he knew about SanDisk. If you look at SanDisk's chart, it has gone up a lot recently. It already looked like it had surged a lot in the first quarter, but Druckenmiller seems to have believed it could go even higher from there. And in reality, he was right. This is an important point. When we see a stock that has already increased a lot, it is easy to think, isn't this too expensive now? But great companies can still go higher. Of course, this does not mean we should blindly follow and buy, but it is good to remember that big investors do not buy only because something is cheap. They move based on whether they believe a stronger trend can continue going forward. Third is Bill Ackman. Bill Ackman holds a relatively small numbers of stocks, and he is an investor with a strong concentrated investment style. Looking at this portfolio, he holds a total of 12 stocks, newly bought 2 stocks and sold 1 stock. The overall portfolio size slightly decreased. Here as well, we can see some cash being raised. Looking at his top holdings, there are companies like Brookfield, Amazon, Uber, restaurant brands, Microsoft, and Meta. The most noticeable one this time is Microsoft. Ackman newly bought Microsoft. Looking at Microsoft's chart, it looks like he entered when the stock price was heading toward the bottom. Now it has already hit the low and rebounded somewhat. The reason Ackman bought Microsoft is probably not simply because big tech is good. Microsoft has AI infrastructure, cloud, and software all together. So if AI investment continues, Microsoft can be one of the most stable choices. From his latest interviews, it looks like he bought under $400 level. Ackman bought more Amazon too, so he's focusing again on AI and big tech. But he sold most of his Google shares again, just like last time. Pretty wild, right? Buffett bought Google, while Ackman reduced Google. This is exactly what is important in investing. Even when looking at the same market, one investor sees it as an opportunity, while another sees it as a time to reduce. So instead of just following one person's portfolio, it is more important for us to compare the moves of several investors and look at the bigger flow. Fourth is Peter Thiel. Peter Thiel reduced a lot of publicly listed stocks last quarter, and he has still not come back this time. Looking at this portfolio, there were no newly bought stocks, and he also appears to have cleaned up the remaining position. But that does not mean Peter Thiel has a negative view of AI. It is actually closer to the opposite. Peter Thiel seems to see a bigger opportunities in private AI startups or new infrastructure companies rather than publicly traded big tech companies. Recently, there was also talk about his investment in new AI infrastructure such as ocean data centers. So Peter Thiel does not seem to be saying the AI theme is over. Instead, he seems to be saying there are bigger opportunities outside publicly traded big tech. This part is also important. AI investing is not only Nvidia, Microsoft, and Google. Power, data centers, semiconductor equipment, software, and private startup. The ecosystem is becoming much broader. Now let's summarize these 4 investors. Buffett significantly increased Google and sold payment companies like Visa and MasterCard. Overall, he continues to build cash. Druckenmiller is finding opportunities in South America, semiconductors, and healthcare, but he reduced the overall size of his portfolio as well. Bill Ackman bought Microsoft and Amazon, putting weight back into AI and platform companies. Peter Thiel moved away from publicly listed stocks, but he's looking at private AI and new infrastructures. All four of them are moving in different directions, but there is one common point. Rather than putting all their money aggressively into the market, they are building some cash and waiting for the next opportunity. This is what we can learn from current market. When the market is good, every stock can start to look attractive without us even thinking. But true masters choose good companies while always keeping cash for the next opportunity. Let's also briefly look at next dividend schedule. Next week, companies like Equinix, Microsoft, 3M, Johnson & Johnson, and Lowe's have dividend-related dates. Dividend investors may want to check those. Lastly, I want to leave you with one quote from Howard Marks. The key to investing is not predicting the future, but preparing for the future. Today's portfolio from these legendary investors eventually gives us the same message. Instead of trying to guess the correct answer, we need to build a portfolio that is prepared for multiple scenarios. I think that is the most important mindset in the current market. If today's video was helpful, please like and subscribe. Thank you for watching.